Welcome back to our channel. If you've been following the Iraqi Dinar, you've probably heard the term contract rates thrown around on social media and forums. There's a lot of buzz, a lot of speculation, and frankly, a lot of confusion. So, what are these contract rates everyone talks about, and are they real? Today, we're cutting through the noise to give you a clear, reality-based explanation. First, let's define what people mean by contract rates. In online communities, this term describes a supposed preset, special exchange rate for the Iraqi dinar, one that's much higher than the current market value. The story goes that when a revaluation or RV happens, holders of these contracts will get to exchange their dinars at this incredibly favorable rate. But here's the crucial point. Contract rates are not officially recognized in the international foreign exchange market. Central banks and financial institutions determine currency values, not secret backroom deals or special contracts for a select few. So, what's the difference between these speculative contract rates and the real market rates? It's simple. Market rates are the official exchange rates you see on forex platforms. They are determined by supply and demand, economic policies, and global trading. They are real, verifiable, and constantly updated. Contract rates, on the other hand, are a concept promoted almost exclusively in speculative circles. There are no official banks or financial institutions that will honor them. In short, market rates are reality, while contract rates remain a part of an unverified online narrative. Where did all this talk about contract rates even come from? The rumors really took off in the mid-2000s. After the 2003 war and the subsequent reissuing of Iraq's currency, hopeful investors, anticipating a massive jump in the dinar's value, started sharing stories of secret, preset rates reserved for insiders. Social media and YouTube channels amplified these rumors, with some influencers claiming that these contract rates would go live any day. A general lack of understanding about how foreign exchange markets actually work made many people vulnerable to this misinformation. But after all these years, not a single legitimate contract rate has ever materialized in any official banking system. So, how is the Iraqi dinar actually valued? The process is managed by the Central Bank of Iraq, or CBI, sets an official exchange rate for the dinar against the US dollar to maintain economic stability and manage the country's foreign reserves. Currently, that official rate is set by the CBI. Any future change, whether you call it a revaluation or a redenomination, would be a formal decision announced by the CBI and would be reflected in the official global forex markets. There are no hidden backdoors or secret rates that would give some people an advantage over others. Believing in contract rates can be misleading and risky. Why? Because they have no legal backing. They are based entirely on speculation and unverified sources. The promise of massive overnight returns can encourage people to make risky financial decisions, sometimes investing far more than they can afford to lose based on pure rumor. It also creates confusion for new investors who might think they've missed out on some special rate that never actually existed. So, how can you protect yourself if you're interested in the Iraqi dinar? First, always track the official exchange rates on reliable forex platforms. Be highly skeptical of anyone claiming contract rates are live or promising guaranteed returns. Most importantly, consult with a licensed financial advisor before making any investment decisions. And a golden rule of investing: never put all your eggs in one basket. Currency growth is a slow process tied to a country's economic development, not an overnight lottery win based on secret rates. Many people hope for a revaluation that would turn their dinars into a fortune. While long-term growth is always possible for any economy, it's important to have realistic expectations. Any significant increase in the dinar's value would require major economic and political reforms within Iraq. If and when that happens, the news will come directly from the Central Bank of Iraq and be reported by major international financial news outlets, not from a random YouTube comment section. To wrap it all up, contract rates are a speculative myth. The only rate that matters is the official market rate set by the Central Bank of Iraq. While the idea of a secret high-value rate is exciting, it's not based in financial reality. Always rely on verified official sources to make informed decisions. In Part 1, we covered the basics of so-called contract rates. Today, we're cutting through the noise debunking the myths, and giving you practical, safe guidance for your investments. Let's start with a quick recap. Pause online. You'll hear about contract rates, these supposedly secret preset exchange rates that promise to make you rich overnight, with values like $3 or more per dinar. The story goes that only special insiders have access. The reality, there is zero evidence that any central bank or legitimate financial institution operates this way. Forex rates are public and transparent, not hidden in secret contracts. So, how does the Iraqi dinar market actually work? It's simple. The Central Bank of Iraq, or CBI, sets the official exchange rate. As of late 2025, that rate is around 1,418 dinar to $1. The dinar isn't a major global currency. It has low liquidity, which means it's not widely traded outside of Iraq. The key takeaway is this: the dinar is a managed currency. Any major change in its value will come from careful government planning and economic reform, not from a secret switch being flipped. This brings us to the common myths that just won't go away. Myth number 1. The contract rates are going live any day now. Truth is, there has never been an official announcement from the CBI about this. These claims are just clickbait. Myth number 2. Only insiders, or those with large amounts of dinar will benefit. Again, false. Official currency exchanges are fair and transparent. Everyone gets the same market rate. Myth number 3 is the big one. The revaluation will make one dinar instantly worth $3, $5, or even $10. An overnight jump of that size is economically unrealistic and would destabilize their economy. Central banks work to prevent shocks like that, not cause them. And finally, myth number 4. Social media gurus have insider information. Bows. Always remember, official information comes from the Central Bank of Iraq itself, or from reputable financial news sources like Bloomberg, Reuters, and CNBC, not from anonymous accounts on TikTok or YouTube. So why do these rumors persist? It's all about emotion. The idea of getting rich quick is incredibly appealing. Many people are new to Forex and don't understand how currency markets work. Social media platforms amplify sensational stories, and the fear of missing out, or FOMO, keeps people hooked. But making financial decisions based on emotion and hype is a recipe for disaster. So, how can you approach the dinar safely? Step 1. Use verified sources. Track the official rates through the Central Bank of Iraq's website or trusted Forex platforms. Step 2. Set realistic expectations. A sudden massive revaluation is a fantasy. Treat the dinar as a long-term, highly speculative investment, not a lottery ticket. Step 3. Diversify. Never put all your money into a single high-risk asset. Spread your investments across stocks, bonds, and other more stable options. And step 4. Avoid scams. If someone offers you an insider deal or uses high-pressure tactics, walk away. Let's quickly touch on how Forex really works. Rates are driven by supply and demand. While a central bank sets a baseline, it doesn't grant secret, privileged rates to anyone. For a currency with low trading volume like the dinar, you might see small fluctuations, but not a massive overnight RV. The global financial system is watching. Any major currency shift is monitored by banks and regulators worldwide. Anyone claiming they have secret knowledge is almost certainly spreading misinformation. Fear. Here are the red flags to watch for. If there's no official announcement from the CBI, it's not real. If the promises sound too good to be true, they are. If the source is anonymous or unverified, be skeptical. And if someone is creating a sense of urgency, telling you to act now or miss out, it's a classic scam tactic. For those of you holding dinar, the best advice is to stay grounded. Track the real rates on official sites, follow announcements from the Central Bank of Iraq, and ignore the unverified hype on social media. The dinar might gradually strengthen as Iraq's economy grows, but instant wealth is not part of a realistic financial strategy. In conclusion, the idea of contract rates makes for a great story, but it has no basis in the real world of finance. Base your decisions on facts, not fantasy. Ignore the rumors and focus on safe, long-term investment principles. By separating myth from reality, you can protect your finances and make truly informed decisions. Now, in part 3, we're diving into what the future might hold. We'll explore potential revaluation scenarios and what you, as an investor, should realistically expect. Before we get into predictions, let's ground ourselves in Iraq's current economic situation. SPET. The Central Bank of Iraq maintains an official rate of about 1,418 dinar to the US dollar. Unlike major currencies, the dinar has very low liquidity on global forex markets, meaning rapid, massive swings are highly unlikely. The currency's real value is driven by solid economic factors, oil exports, government stability, and regional politics, not by social media speculation. Always remember, currency strength comes from macroeconomic fundamentals. So, what would a real revaluation, or RV, actually look like? Forget the contract rate chatter. A genuine change would be government-driven and very public. Let's look at a few scenarios. First, a gradual revaluation. This is the most realistic path. The Central Bank of Iraq would slowly adjust the dinar's value over months or even years to manage inflation and strengthen the economy. We might see the rate move from 1,418 to maybe 1,300 or 1,200 against the dollar. For investors, this reflects sound, sensible economic policy. Second, a rapid market-driven increase. This is less likely, but could happen if Iraq suddenly announces major economic reforms or new international agreements. But even then, forex market mechanics would mean the change in value would still be more gradual than an overnight explosion. If this happened, expect volatility. Sudden spikes are incredibly rare and usually don't last. The third scenario is no significant revaluation at all. If political instability continues, or oil revenues drop, the dinar might just stay stagnant. In this case, many long-time holders would see very little change in their investment. This is why patience is key, and you should never let hype drive your decisions. So why does all this contract rate hype exist? It's all about investor psychology. Stories about contract rates going live create a sense of urgency. People get caught up in the dream of instant wealth and start overbuying, taking on huge risks. This can even artificially increase the demand for physical dinar notes, but it sets up false expectations. When the promised rate never appears, panic can set in. Boom. The reality is that only official announcements from the central bank and legitimate forex platforms show the real market changes. There is no secret contract rate waiting to be activated. What do international experts think? Global financial institutions like the IMF and the World Bank monitor emerging markets like Iraq very closely. Their reports advise Iraq on economic reform and monetary policy. Foreign investors are generally cautious because of the low liquidity and political risks. And forex brokers, they provide the real-time trading rates that reflect actual market conditions, not speculative rumors. The key takeaway here is that global finance doesn't run on online gossip. A true revaluation would be front-page news everywhere. So what are some realistic future rates? Based on economic models. Here's a possible outlook. In the short term, say the next 6 to 12 months, the rate will likely stay stable around 1,400 to 1,420, unless something extraordinary happens. In the medium term, 1 to 3 years, we could see a gradual strengthening to around 1,300 to 1,350. If Iraq's economy improves, a significant long-term revaluation is only possible if Iraq achieves real political stability, boosts its oil revenue, and implements strong fiscal policy. These are the verified scenarios to focus on. How should you plan your strategy? First, track verified sources only. That means the Central Bank of Iraq, trusted forex platforms like Wise or XE, and reputable financial news outlets. Second, completely avoid relying on insider leaks or YouTube claims about contract rates. Believing them can lead to impulsive, costly mistakes. Third, diversify your investments. Don't put all your eggs in one currency basket. And finally, monitor the big picture: oil production, political stability, and central bank policies. 2. Understanding these fundamentals will give you a much more realistic view of the dinar's future. History has taught us valuable lessons. Waves of dinar RV rumors have been circulating since 2003. And none of the instant wealth predictions have ever come true. Those who followed the rumors often lost money. Educated, patient investors who focused on verified data have always been in a better position. The bottom line is simple. The reality is that the Iraqi dinar is a managed currency, and any revaluation would be public and gradual. The speculation about secret contract rates has no basis in reality. Our advice is to focus on verified rates, macroeconomic factors, and safe investment strategies. By separating myth from reality, you can make informed decisions and avoid falling victim to hype. Thanks so much for watching. If you found this helpful, be sure to like, subscribe, and hit that notification bell for more content. See you next time.